Sir, good morning. Always a pleasure speaking to you here on News 9, sir.
Thank you. Thank you so much. Thank you.
Now, sir, in the last 3 weeks, we are on a 3 week winning streak. In the last 3 weeks, Nifty has scaled up by about 900 points or so. For the for the short term, 2 to 3 months, what's your directional view of the overall markets, and what are some of the key factors that you will be tracking till the end of 2023?
Thank you, and morning to all of you also. So it's a very tricky question, to be very honest. We'll have a couple of events on the domestic front, which is going to be very, very important. I'm talking about the 5 state elections which are underway, and the outcome of that will be known by first week of December this 2023. And next year we have a big election. So from now up until next 3 to 6 months, if you ask me, it's going to be extremely challenging in terms of volatility, Suyash. But at the same time, there is going to be plenty of opportunity stock specific. Volatility, I'm referring to the index, that is sensex and Nifty. Opportunities, I'm referring in terms of sector and stock specific ideas and the news flows that are following. So there's going to be a little bit of tricky and choppy kind of view on the markets for next 3 to 6 months. Post the election done and dusted and the outcome known, our sense is that we are going to see a very decent rally upwards. We might outperform the emerging market peers and possibly turn out to be the best performing market. And of course, on the earnings front, whatever we've seen done and dusted in the second quarter, third and fourth is likely to be a shade better and possibly much better in terms of performance in the next financial year. It's going to be plenty of opportunity in terms of stock picking investment ideas from a long-term point of view.
Now, sir, talking about, the focus being on sectors and stocks, one of the sectors that, perhaps there was some negative bit of news flow in Friday's session was the banking and the financial pack, where RBI has, made the norm stricter for unsecured lending. What kind of, overall impact on the profitability of banks will it be? Because from what I understand, they'll have to, increase their provisioning.
So yes, to be very honest, I've heard into the comments from some of the top managements of banks and NBFCs over the weekend from Friday since we got to know about it. And let me tell you this very frankly, Suyash. I think it was need of the hour. The kind of whip that has been cracked by the RBI on unsecured loans. I don't know how many calls or SMSs or emails you must be getting, but I have got plenty of such, unwarranted, unpleasant calls, whether you want a loan or whether you have a car on which you want a loan, whether you want an education loan, you want a, extended credit limits on your credit card. To that extent, let me go on record. I got a message on my personal phone saying that a card has been issued to you, which did not, that the cell number did not belong to me. The name was of some other person. And the lethargic approach of that bank is, and let me tell you, it is one of the leading private sector banks, that they have not even bothered to verify, even after me telling them that, listen, I have not applied for any credit card and I've got this message and you have issued saying that your application is under process, but the information that gentleman has given to you is wrong. It is my cell phone number and I have not approached. So you can understand the severity and, since kind of approach that the RBI is taking is to possibly control. A lot of things were going out of hand, and unfortunate part is that if it goes out of hand, then it has a domino reaction, chain reaction, which leads to a very complex situation, and to get hands and control on that situation becomes very difficult. 2020, Suyash, if I'm not mistaken, 125% was there in terms of risk cover. It was brought down to 100 now and RBI had also warned the banks and NBFCs way back that, listen, if you don't get your acts right, we'll have to act on this. And they've done that. And I'm glad that this action is taken because it will possibly protect the unforeseen unpleasant situation which it would have created. Like I gave you my example. So I think it is good. It will bring in discipline and it will bring in clarity.
And what about the sir? The question about the profitability. Some of these banks have a high retail exposure. Do you think their perhaps profitability would be significantly impacted?
I don't think so, to be very honest. And to give you a clear-cut view on the banking and NBFC post this step by the RBI, we remain optimistic on strong banks, strong NBFCs, whether it is private banks, whether it is public sector banks. We are quite optimistic. And credit growth is not only going to come from the unsecured category, but also from the secured corporate side I'm talking about. And you will have opportunity. I mean, margins may get impacted for those who have over leveraged, Suyash, and not bothered about uh, risk profiling your customer. Whether the customer, after giving the loan, has the ability and strength to give you your principal and interest in installments or EMI form. So I believe it's an opportunity from a long-term point of view. We've seen this correction on fallback of this news flow, but long-term, strong NBFCs, banks, I don't think their margins would get impacted that seriously that will call for downgrade or a re-rating downwards.
So, but on Friday we saw across the board sort of correction, whereas Axis Bank, stocks like Axis Bank corrected by about 3%. HDFC Bank also came under fair bit of pressure. For those stocks, which at least from hearing from experts, the valuations are looking attractive. Is this an opportunity to perhaps enter these stocks?
So, large cap private sector banks, when let's talk in terms of earnings and performance over the last 5 years or maybe more. And you have witnessed, I have witnessed that public sector banks have outperformed, beg your pardon, private sector banks have outperformed public sector banks. Now, within this time, post the changes, mergers, the strength and the health of the public sector banks have improved. And hence, we have seen the kind of performance. To answer your question, as far as Axis or HDFC or the ICICI banks of the world is concerned, they remain on our fundamental coverage on the positive side. And our sense is that this is not the only time that you should buy. I think overall, even if you get a correction because of local or global events, geopolitical situation, from a long-term point of view, I would advise to do a SIP in all these big private sector banks from a long-term point of view.
All right. Sir, another sector that I wanted to pick your brains on was the IT pack. I mean, what phenomenal returns we have seen in the last week or so. The Nifty IT on the whole is up around 6% or so. And even the bellwether stocks are performing, like your TCS, like your Infosys, like your Wipro. What's your overall view over there, sir? I mean, is the exuberance even justified given that, we are hearing only talks of inflation coming down, and Mr. Powell has said that, they will be very vigilant on how inflation thing pans out before even thinking about rate cuts?
I think Jerome Powell, Fed Chair Chief, will have to do what he has to do and possibly take certain steps and initiative which has not been taken in past many decades, because the inflation is at multi-decade high. So they will do what they have to do. We'll do what we have to do. Last week, a phenomenal performance in terms of sectorial index, if you go to see Suyash from Nifty IT, and similarly stock specific. We as a brokerage house, Geojit Financial Services, has always been advocating that you cannot ignore IT sector. You have to look at IT sector from 1.5, 2 year plus kind of time horizon, given the headwinds that they are facing, be it budgetary cuts, be it inflation and pressure, be it discretionary spend in the US, lack of large ticket coming through, wage hike, burden on margins, attrition rate, etc., etc. But this is a very interesting sector given the fact that we are going through tremendous amount of changes in terms of IT environment, cyber attacks, various other kind of attacks on corporate sites. Individually, we have been having issues dealing with these kind of situations. and you will need services, platforms, products of IT company to safeguard your IT environment. So we remain
Hmm.
optimistic. We were then, we are now, and we will remain positive. But in this sector, if I had to look at the earnings and comparison between large cap and mid cap IT, then I think mid cap
Hmm.
IT has been doing quite well compared to large cap IT. Not that we are negative on large cap IT. I'm just talking about a comparison.
Sir, I mean, I also want to pick your brains about the US markets and the scenario going on in the global markets as well. I mean, we are also hearing talks about US perhaps slipping into recession by, next financial year, by the second quarter of next financial year. A couple of weeks back, we were, there was all the chatter about a soft landing given how inflation was easing off nicely and, the economic indicators were resilient. Why suddenly talks of US falling into recession, sir?
Uh, Correct me if I'm wrong, Suyash. From the beginning of this year, we are hearing this,
Hmm.
not only in US but also certain parts of Europe. So they will, like I said, like the Fed chair will do what it has to do. Similarly, whether it is a hard landing, soft landing, going into a, having inflation issues, going into a slowdown mode, that only time will tell. And most of the pundits have been proven wrong if you consider the view from the beginning of this year, calendar year 2023.
Hmm.
So they have managed to keep their head afloat. Let's hope that they will keep their head afloat. And eventually, then if even if this has to happen, Suyash,
Hmm.
where will the money flow go to? It will go to emerging markets and
Right.
economies which are doing better.
Hmm.
And I think some of the foreign institutions themselves have said that India is possibly going to clock 6.5% or more GDP growth rate.
Hmm.
In given that environment, I think you will see more green bucks coming into the Indian economy in form of FDI and equity investments.
Sir, now we talk about how you should perhaps tweak your weightage into the emerging market basket. How given the geopolitical chips are played. But for a retail investors, how does a small investor gain exposure to, let's say, a Taiwan or a Hong Kong? What's the best way for them, sir?
I am a strong Bharatiya, and I believe there are plenty of opportunities to yes in our markets. You don't need to look at Taiwan or Malaysia or Europe or US markets. And let's face it, Suyash, small investors have very limited resources in terms of what they save and what they invest.
Hmm.
And I think that our market has got enough opportunity for a small or a medium sized retail investor to keep their appetite full.
Hmm.
Uh, and unfortunate part is that whenever you invest into any overseas economy or equity market, you are exposed to the risk of that particular geography,
Hmm.
and very difficult to control that. So if you're a smaller retail, medium-sized kind of a retail investor, stick to the basics and sticks to the Bharatiya boundaries. I think there are plenty of opportunities.
All right, that's the view from Mr. Gaurang Shah. Sir, always a pleasure speaking to you. Thank
Thank
you for
you.
joining us here on First Take.
Thank you. Thank you so much. Take care. Bye.